Hello, traders. Today is Friday, August 26th. We're going to go over the crude oil futures and my mistakes for the day and my success wins. So we're looking here at pit open. That's right about 7:50. That's when I start watching the market. Um, no significant increase. Actually, it looks like it had a consistent volume all the way back earlier in the morning. So, anyways, looks like what I was noticing was, just a very sideways motion. And when we started, since we had been kind of moving to the upside, um, just in the last couple of hours, you can kind of see this trend going to the upside. I started looking for long positions. So when we broke out of this consolidation, it wasn't strong, but we broke up right about here, and that's when I started getting aggressive. I took a trade to the top end, a little bit premature because it was still testing the top end of this channel. Well, I ended up took my entry and then I closed in the stop and profited 2 ticks, just because I didn't see enough momentum to the upside. Well, good thing I did because it shot straight back down to the bottom end of this channel. And then you started seeing weakness down here. So all of a sudden, and that's when news came out. Um, when news came out, I don't know what news came out, but it's always good to check for news. So I checked for news, of course, and news there was some upcoming items, high impact items. So I didn't trade at all, and sure enough, it sent the market down. And after the first push, I wanted to make sure it wasn't going to come back up and inside of this channel. So when it actually rejected off of the outsides of the channel to the bottom end here, that's when I knew I was going to get in. So just it started really moving, and right when it approached the bottom end of this last peak right here, that's when I decided to get in. You can see where I got in and took that for 10 ticks. Could have let that ride longer, but it was very turbulent. I didn't even have time to move my target from 10 ticks. It already filled it. So once we got to the bottom end here, there's no way I'm going to be getting into a trade. That's exactly the wrong spot to get into the trade after the move is already made. So I just waited to see what would happen next. We came back and tested this previous area, which could have been a good area of interest to go short again, but there was such a strong momentum. A lot of buyers were coming into the market very aggressively. So at that point, when you're looking at the 1 minute chart, you can interpret those buyers real time. And so what I was looking at was the buyers at that point, and you could see here tremendous amounts of buying coming in. So when it came and tested that area that we're talking about, I wasn't convinced that we were going to be going back down. We did have some sellers enter, but it just wasn't enough to convince me, so I stayed cautious. And sure enough, we broke back up, tested this area again, but since we broke this area, that's a level of concern. That would be the area of entry if we were going to be going short. Well, it did the opposite, came back up here, started testing this area. I got cautious. So since we were now in this interesting consolidation area between another consolidation area and a new low, I started getting concerned about a reversal. So sure enough, um, just sat on my hands. It came back up and went back into this consolidation area. So now what I'm looking for is either we're going to just stick on the mean, you know, um, and I hate to draw these lines because they stop becoming relevant after a certain point, but I just want to kind of show you what I was thinking as I was thinking it real time. Um, just take some of this out here. Let's take this, move this. Okay, so this original line I had drawn was kind of our old area of support back this morning when we were first looking at it. Well, now we This old area of support started to become resistance once we broke through it. Well, then it came and tested that old area of resistance, and then it rejected off of it, came back. Um, this was my gauge to see once we once we came back. We're testing this area. We broke down. Now, when we came back to it, of course, we broke across it and back in, testing the old resistance because it couldn't test it. It broke through this resistance. Now I'm looking for this resistance to hold. It broke through. Now we're starting to become support again. And that's when I started, realizing that we potentially could begin to move back up into the upside. So this would be a bear trap right down here. A lot of people probably bought into that. I did take a trade into it, but then, remain cautious afterwards. So when we came back up and tested this area, now this is going to become support again. So I'm no longer looking for shorts because we're back into this consolidation area. So now I'm looking for longs again, but I want to test the top end of this zone that I had previously. Once we broke above that, it was very small, but there was a small break, and it was right here. Now my only concern, since we broke above that, is that we could have a bull trap come right back into that consolidation area and then just have a sideways day for the rest of the day. Well, um, when we broke above, that was the sign I should be looking for longs. It, it didn't come back all the way. It came back and tested the top end, broke through, and that's when I decided to go long. I probably went premature. I think realistically, from gauging all the buyers in the market, my realistic point of entry should have been somewhere uh, near the moving average cloud. That should have been realistically. I mean, I should have actually had a buy order waiting. So once it came back and broke above my candle, my range candle, then this is where I should have got in. I should have had an order waiting to trigger me into that, and I could have eked out a quick 10 ticks. But instead, I got in late, trying to assess the situation and act a little prematurely. Well, anyway, so the move was made. It came back. So two mistakes. Not only did I get in late, I did save myself. I only lost a tick or maybe two ticks, but I should have then had another order waiting right here because it came back and tested. We were already outside of this consolidation range. We had broken through it. We broke through it here, came back, and it rejected out of re-entering and testing the bottom end of the range. So it never came close to it. Once it went to the top end and broke through, that was my indication that I should have got in here, taken it for 10. Then as it came back and started to retrace around the you know um, somewhere around 62% retracement, I should have had order waiting trigger in again right above. So that should have been right about here. That would have been my triggered entry. But I was not thinking fast enough, and I kind of lost sight. So, anyways, two big mistakes there. Um, got in late here. Probably should have either avoided this entirely or held a longer stop. But I hold a closer stop. So if I could have instead been patient, waited for the retracement. Clearly, we had the momentum. Look at these bars. Clearly, the momentum was there, which means that once it made its move, and here's an important point. Here's a good trick for you. If you really want to know where a good spot to get in is, and not a good spot, you're excited when you see something move really strong. It's like a knee-jerk reaction. So you instantly say, "Oh my God, the market's moving. I got to get in." Well, by then it's already too late, and that's what everyone else is thinking. Everyone's baited in. Here's a good thing that you can do. Take previous moves in that direction. So let's just say I draw a line. And this is real simple. This is real simple too. That's the maximum run. That's the length of run. And so if you look now, you can measure the rest of the runs using that. Look at that. It's about the same amount of run right there. So this little gauge, of course I do this subconsciously now when I remember to. I don't need to use a measuring tool to do it. But as I'm looking and the market's moving, let's just go back a little here, give you an idea. So the market's moving to the upside, And let's say now I see here that this move moved so far. Now let's say I want to get in right here. Now I'm wondering, as I'm going in, let's say I'm late to the party. The move is already made. You don't want to get in here because the previous measured move was only as long as, usually the previous, and it's not exact. But do you really want to get into the market when it's too late? Because right now it looks like it's already ready to max out its move, retrace back against you. So you want to be in the move when it's down here, not when it's up here. So the knee-jerk reaction needs to be, contained, resisted. If that's where discipline comes in. So that's a neat little tool that you can use. If you look back in time here, we don't have the momentum yet. I mean, we do have, this breaking of consolidation. There's a lot of consolidating happening here, reversal. So not a good place to use the tool. But even if I was to, you know, make a decision afterwards, after you clearly see the momentum, well, then you can see the lengths of these moves are all about the same. Look at that. See? So I have three of them right in a row, almost the same size. So I hope that helps you figure out when not to get into the trade. Just look at the previous moves, and this only works once you're in a momentum direction. And clearly, after this point, we are in a bull market momentum. So we're looking for longs here. Just getting into the longs. Like I said, I'm a fan of triggering into the order. I don't like to guess where it's going to pivot. I like to let the pivot move first and then jump into the order with a trigger order waiting. So just two mistakes that I made there. Still, made out about 35 ticks. This is all sim trading for the day, so I didn't live trade today. Not going to be live trading till September. I think I'm going to be trading the week of after Labor Day is my re-entry into the market. So just staying patient and cutting my chops. Took a break for the summer and just waiting to get back in. Here I went and got coffee, so I missed some great moves here. Um, and so on and so forth. You can see I took a simple, quick trade here. It went against me. That was kind of silly of me. I really thought that once we broke this area, we were going to make another leg. Actually, that wasn't too bad. That actually was that was 10 ticks. Oh no, it was a little shorter. So anyways, you can kind of see here, I waited for the pivot to break above the cloud, and that's when I took. And that was a good probability area. Of course, we already exhausted most of the moves. You only get so many chances, in these leg ups until things have to turn around and reset, correct, so to speak. So it could have happened. It could have went one way or another. I did make, I think that was 8 ticks on that one, but it didn't go for the full target. That's because I moved my stop up right up underneath that as it put me in profit. So that's the recap for the day. I hope that helps you. If you have any questions, uh, get a hold of me on daytradersupport.net. Okay, thanks.